What is up, Bat family? Hope everyone had a fantastic weekend. We are in the middle of December here. It's almost Christmas time. It's the holiday season. This week is going to be an exciting trading week coming up. We have lots of news, lots of great setups. Hope last week was a great trading week for you all. We called some great trade last week in the Telegram community. I'm going to call a few Bitcoin buys and one gold buy as well before I had declined massively last week. Overall, it was a very profitable week for myself as well as the Telegram group. And if you have not already, go ahead and join Bat Signals, my free Telegram channel. It is in the video description here. I send technical analysis updates, news updates, as well as signals, hence the name Bat Signals. Alrighty, so we're going to hop in here this morning. It is all right if no one joins us because this will be uploaded here later this morning or later this afternoon, I should say. But if anyone does, they'll be popping in here. But we're just going to start with the news and make our way through. So today is Sunday, the December 15th. So let's back it up a week. Alrighty, so to start with the news for the week, we have right on market, well, a few hours in the market open, Sunday today, Chinese yuan. Alrighty, let's get started with the news here for today. So we have Sunday, 6 p.m., a few hours into Asia session, which is news, medium impact news for the Chinese yuan, which is retail sales and industrial production. Alexa, volume down. On Monday, which would be London Open, we have high impact news for the euro, which is French flash manufacturing, PMI, which is purchasing manager index, similar to the news that we had for the US dollar last week. Following that, we have European Central Bank President Lagarde speaking. 15 minutes later, we have German flash manufacturing PMI. 5 minutes after that, again, President Lagarde is speaking. Flash services PMI for the euro. And then later, another 30 minutes after that news event is flash services PMI for Great British Pound. So high impact news, medium impact news for the first hour and a half into London session Monday. So that will be pretty exciting. There's going to be lots of volatility. Later that morning, we have high or medium impact news for the US dollar pre-New York Open, which is Empire State Manufacturing Index, then Flash Services PMI, Flash Manufacturing PMI for US dollar, 15 minutes into the US Open, or to the New York Session Open, I should say. 15 minutes into the New York Session Open. Then later that afternoon, Bank of Canada Governor Macklem is speaking, and later that evening, pre-London Open, claiming count change for the Great British Pound. Monday is going to be one heck of a day. Prepare yourselves, get your seatbelts on. It's going to be very volatile. So be ready. That is going to be a great trading day. Tuesday. Man, I can't believe that was just only Monday. All right. Tuesday, we have medium impact news for the euro, 1 hour into London session, 2 hours in the London session, similar news event, German ZEW economic sentiment. Let's see what that is. Leading indicator of economic health, investors and analysts are highly informed by future job and changes in their sentiment. Okay, let's see. ZEW is Zentrum for Europace. Apologies if I butchered that. Europace. Wirtschaft Forschung. Okay. Well, that is what ZEW means, for those that were wondering. Following that, later that morning, pre-New York Open, we have high impact news for the Canadian dollar. We have consumer price index for the Canadian dollar and core retail sales for the US dollar. On top of that, later that evening, pre-London Open, we have consumer price index for the Great British Pound. Wednesday, New York Open, or 1 hour into New York Open. My apologies. 1 hour before New York Open, we have medium impact news for the US dollar. Building permits, crude oil inventories, 2 hours after that. at 11 a.m. Pacific Standard Time. So this would be 2 p.m. in New York Eastern Time. We have federal funds rate and FOMC statement. So this is going to be related to the interest rates and the federal benchmark rate. So Wednesday is going to be quite a day. This is highly anticipated news. We may see a rate cut. We may just see rates stay the same. We'll see. Then later that, or a tentative Bank of Japan policy rate, Bank of Japan monetary policy statement, and press conference. What a week. Thursday, we have, we're almost done here and we'll be moving to the analysis. But Thursday, we have monetary policy summary for the Great British Pound. This would be the London New York crossover. It's at 4 a.m. Pacific Standard Time. So this would be pre-New York Open, I mean, a few hours before New York Open, and a little bit after the peak of London session. So this would be the London New York crossover. 5:30 a.m. we have final GDP for the US dollar and unemployment claims for the US dollar. 7 a.m. existing home sales. Then later that evening, we have medium impact news for the Chinese yuan, which is 1 year and 5 year loan prime rates. And then once again, pre-London Open, high impact news for the GBP, we have retail sales. Lastly, on Friday, after one heck of a week of major economic impact news, to top it all off on Friday, December 20th, we have core retail sales for the Canadian dollar, retail sales for Canadian dollar, and core PCE price index. PCE is personal consumption expenditures. But let's look at core retail sales for the Canadian dollar. Core does not include automobiles, does not include automobile data. They account for about 20% of retail sales, and they tend to be very volatile and distort the underlying trend. So that is what core retail sales is. It does not include automobile sales. Alrighty. Now that we made it through the news, let's go ahead and start with our analysis. However, this is going to be one heck of a week. We have so much news every single day during New York and pre-London session. This is going to be a very volatile week. Alrighty, so let's get started here with the analysis. First pair that we have, we're going to be looking at is gold. Start things off with old goldy gold. So this particular pair had a wild week. It fell dramatically. Price went up to 26.93, actually made a high of 26.92,865 and came crashing down to 2648, 2,648 and 68 cents for the price of gold. This is a dramatic decline. We can see that on the monthly time frame on the right-hand side. Let me clean some of this up. On the right-hand side here, you can see that the monthly time frame is simply just a doji candle right now. It looks like this because when we opened for this month, made this high. From here, we have completely reversed most of the price action that we've done and closed the bearish candle last week. Ultimately, we're going to see price continue driving lower at this point. So next targets that open up here are 25.90, which is this next area down here. So let's go ahead and update some of our technicals. So this would be our previous week's high now, since this was last week's high. Gonna make this a different color real quick. Alrighty, next, this is our previous week's low, because this is the lowest point we hit last week. And if we zoom out on the right-hand side, weekly time frame. Oh, we are actually, this is the weekly low, my apologies. Right here, previous week's low, very nice. What else do we have here? We have a nice area of supply right up here. But as you can see on the right-hand side, weekly time frame, strong buyer's exhaustion. Buyers are weak here. We can see that we may get a continuation down lower as such. Break this previous week's low, breaks this overall area of support that it formed 2 weeks ago. This was the start of the month. There's a lot of consolidation. Prices range around in here, and as you can see, just made a lot of wicks until we finally broke up out of there. But this would be the median area we need to break below for price to get this momentum to go down to 25.90. So that would be the 25.25 price range, 25.25, 25.20. This area here. Next, let's zoom out some. We're going to go to the 4-hour on the left-hand side and 12-hour on the right side. This green zone was the overall higher time frame Fibonacci if we were to continue to keep up with the bullish trend. But we can see now things have changed and looking like we are going to continue bearish for the rest of the year and start of next year, possibly. So let's adjust this area of, no, we don't need that anymore because that is broken. Price ultimately is just looking like it's going to drag or continue to fall down, continue to decline down to the 26.30, 26.25 price range. As such, we may just open bearish based on the strong bearish pressure that we have currently. Let's see here. I really don't see price sustaining above this area of support at the 25.25, 25.20 area. If it does, then there are upside targets up to the all-time high. We still have 27.30 as a potential target, 27.50, and then beyond. But overall, this is just looking very bearish. I don't see this going higher. Since we have closed so bearish, let's drop down to lower time frame, the 1 hour. We have some lower time frame structure here, the 2660 up to 2665. So where this blue line is up to this area of previous resistance, broken support now, but we can see here that price may come up into this area, 2660, 2665, and then we may get a continuation. So we could see a pullback, bullish pullback on the higher time frame, right-hand side 12-hour. We'd see a wick up to this area before potentially going down. Maybe a little pullback like that, maybe a little further, and then continuation. Something like that would be nice to enter on. And yeah, just based off of how we close, it could just open bearish and just keep pushing down. We shall see though, but I'm going to set an alert at 2665 just in case gold does pull back this high, we can get in. And an alert at 2660 just to have me aware that price is in an area that we could potentially enter sells at. All right, so we have both of those set. Yeah, this just overall looks like it's a clean bearish trend looking to continue lower at this point. We'll have to see. But overall, still looking like strong bearish moves to come. We'll save that. Next, we'll look at the NASDAQ 100 here on the left. So last week, NASDAQ made a new all-time high once again. We have hit that overall higher time frame Fibonacci extension, which is that green zone. This higher one up here is the next area we may extend to if price continues its overall bullish trend that we're making. So right here is going to be our previous week's high now, where the all-time high is, because that was last week's high. Perfect. Next, we'll change this to, let's see. Let's zoom out some. So this is our previous week's low down here, this wick. On the left-hand side, going to the 12-hour. Perfect. And let's change this to PWH. Let's duplicate this to make it easier. There we go, previous week's low. See a nice retest right here that price made. Okay. What else do we have? Alrighty, this is overall looking pretty good to me now. So the right-hand side will start on the weekly time frame. We closed as a bullish candle last week. We can see we had a pullback, did not quite go into our overall retest area, but still swept the previous week's low. Oh, let's change this real quick. Hang on. Took liquidity and then made this overall stronger move, big move higher, up to create a new all-time high. We have this area of demand down here, which is this black zone I'm creating at the 21,650 to 21,600 price range. We can see there's some exhaustion on Friday. Once it made that new high, we had a lot of people taking profits, people jumping in for short-term sells to catch the momentum, for people taking the profits. We jump down to the lower time frame at the 4-hour. We see a strong bearish candle. We can see that a bullish candle followed right up to create some sort of higher low point. Fix this zone. I don't know what's going on here. Okay. Overall, I want to say price is going to continue trending higher. We have an area of a retest area price could potentially go to, which is the zone. We may get another move deeper into it. Maybe something like that. But with it closing bullish as it did, I really feel that or it looks as if a pullback may happen as such, then a continuation move. It's a little bearish candle to start the week, make it low, and then continue much higher. The daily time frame, yeah, exhaustion does not look the strongest, but if it holds above this higher low point, then it's just going to continue higher. If we break below the previous week's low here, there's some further downside, which could potentially be this 21,300, 21,250 area where the zone is, previous resistance is right here. Price could come back down and respect that and retest it if that previous week's low is broken. Overall uptrend, still looking to climb higher. Let's go to a slightly lower time frame on the 1-hour. For those that use trend lines, there is one right here. Or based off the 2-hour time frame. So this does have some weight. We could get a retest of it. Maybe like that. And then continue. Or it might just break through and be the momentum to cause a stronger bearish move. Overall price is looking just to continue higher though. I don't see this going bearish yet or anytime soon. It just looks like higher highs, higher lows are being made and can ultimately just see it climbing higher up to potentially 22,800 up to 23,000. We'll have to keep an eye on this though, as the Nasdaq is in price discovery right now. This is the highest that it's been, and it's a little uncertain to be buying at these highs, but overall, good risk management, respect the structure, and trade with the structure, with the trend, catch the lows and the breakouts, and we should be able to hopefully take advantage of any further upside. Second to last pair here will be the US 30. We can see that's been a strong decline, very, very strong decline for the last 2 weeks. This is the last week's candle, strong bearish candle, no wick at the bottom, just literally a lot of selling pressure here. So we're going to mark this off as our previous week's high. 1 sec. Let's drag this down some. So this is our previous week's high right here this week. And hello, Daniel. Hope you're doing well. We have one more pair after this, which will be Bitcoin. Good old Bitcoin. All right. So previous week's high here, previous week's low is going to be this low down here. And oh, fantastic. Let's remove the text. Okay, so let's zoom out some and see where we can find some lower time frame structure. See strong engulfing on the 12-hour time frame. Yeah, we might be able to here. No, we look at the monthly time frame. Still has a lot to go. Strong bearish candle. And if we measure it with that Fibonacci extension method that we've been doing the last few weeks, this could be an area of reaction where this is lining up. So we could see something like this, just a strong bullish candle. It does do that time, like right over here. We might get something like that. Maybe. But it wouldn't surprise me though if we get something like this, because US 30 is notorious for printing these type of candles, but we could see that this week. That wouldn't be unusual. Or maybe it breaks the low and then see a candle like that. So we might be able to take buys on this if there's some type of reaction to warrant that. But overall, it does look like we're heading lower down to the 43,250 area, which is this next area down here. Let's go ahead and adjust these technicals. So right down here is potentially the next price point if this area breaks. If we do see some type of major reaction or retracement up to this area, from the support, we come back up to this area of previous resistance that may act as resistance again if we come up and respect it. But we could come up weekly time frame like this. Big, big retracement, make a big rejection, come crashing down. I could definitely see that happening, especially with all the news that we have. Something to maybe like take liquidity, drive it higher, shake out all these sellers that have been getting in the last 2 weeks, and then drive it very, very low. Or we could just open bearish and it just continue trending lower. But this is what I'm seeing here, though. Some type of bullish move to get the sellers out, get more liquidity, or suck some buyers in to get more liquidity for the overall bearish move that may happen later in the week. But 43,250 is the overall price point I'm seeing. So we'll set an alert there. And then at 43,000, 400 as well, just because that is 400-point move from the current price. And we'll set an alert at 44,400 price range to be alert that, okay, price did retrace. It's at this area. We could sell from here or potentially sell from here. So we'll keep that in mind. But yeah, overall, see continued bearish pressure. May open bearish this week, and we could potentially, or may open bullish this week, and could be potentially targeting 44,400 before seeing an overall bearish continuation move. I'm just going to remove some of these older technicals from the last few weeks. But yeah, overall, that's what we're seeing here. If price breaks above 44,050, start the week, it's just going to continue getting that bullish momentum up to there. So this is this minor area or smaller, lower time frame area of supply. You can call it on the 4-hour or 1-hour time frame, whichever one you want to look at it on, but it's right here. Okay, we'll save that. Last but not least, Bitcoin here. So this pair has been fantastic. From calling it earlier this week down to here when we first saw the rejections. Every day I was watching this, seeing it, how it reacted with all these wicks, and then Wednesday we went ahead and called that. And with the overall trade, still continue climbing higher from the second signal. This one here, the 101 to 100,000 entry, still looking very nice. And we're targeting 104, the all-time high. And today may be the day she breaks above, and we'll be able to take profit, or may have to hold throughout the week. This has taken some patience, but patience does pay. So this is already updated a bit because I did the analysis, set the updated analysis yesterday evening. Let's remove these here real quick. So we can see on the weekly time frame, strong wick rejection here. Once we hit these lows, respected these lows here a few times at the 94,000 through 96,000 price range. Price absolutely took off, was able to sustain above the 100,000 price point. Let's zoom out some. Daily time frame on the right, and on the left we'll go to the 12-hour. As you can see, the previous day's candle closes the doji. There was a lot of indecision. Price did not know what it wanted to do, but it closed above 100,000, which is ultimately what we needed. That gave the clear sign that, all right, we have closed above the strong psychological level of 100,000. We're going to keep climbing higher. Now, there are people trying to sell up here and try and sell the top, but that is going to be liquidity for this overall bullish move to drive us higher. A lot of people are selling right in the support or the supply right here. They're thinking, okay, there's no way it's going to continue higher, and they're thinking it's going to go down, but that's just not going to happen. There is too much bullish momentum right now, and this thing's about to pop. So 105 is in our first sights, 105,000, and then 107. I only see that as a price just extending, and then we made correct. Come back down to retest the 104 price range, then ultimately continue climbing to 117, 120,000. Now, this might be later this month or next month, but overall, that's where we're headed. It could happen next week. It might just be one big bullish candle. Who's to say? But overall, this trade setup looking very beautiful. We're almost to take profit. This is a phenomenal trade. Just really, really good. Testing our patience and just looking just to continue climbing higher. Let's see here. Oh no. It's all right. It does happen. This, how should I say this? There was a point in time where when I first started, I was taking signals from someone that provided multiple crypto signals, and they weren't very good. I had no idea about trading though, and didn't realize right from wrong, and didn't trust the own education I was learning either. I was trusting this person instead of what I was learning. So the things I would learn and what they would do would conflict. But really though, with Bitcoin, there is a lot of it's a lot more difficult to trade than other assets. It's similar to gold in terms of how it behaves, kind of has a mind of its own at times, but you can't get shaken out. And that was a thing that I did a lot, especially when there'd be pullbacks or the trade would take a few days or 2 days, or a week, however long it took, it would mess with me psychologically. And I would, instead of trading, I would sabotage myself, take myself out of the trade, panic sell, or, you know, look to get in later or reduce risk, whatever it was. But what it came down to is a simple quote for me, and it's if you can't beat a buy and hold strategy, how do you expect to ever win? And by putting it that simply, how do you expect to win if you can't win on a simple buy and hold strategy? And I think about that all the time, especially in trades that take a bit longer to play out, especially when it starts coming to my mind like, oh, maybe this isn't working. Maybe I should close and come back and enter again, or in some drawdown. Let's just exit the trade. This isn't working. I remind myself, if you can't beat a simple buy and hold strategy, how are you going to win? And so, if nothing got violated, if you accepted the risk, you didn't over risk. You got to just trust it. If you're in profit, there's nothing wrong, but very nice though. Yep, it is. It takes patience. It takes a lot of patience, but just think about that in those times when you're waiting for that move to play out. You don't see it coming back to your stop loss yet, but it's just not going straight there. Just remind yourself patience pays. And then if you can't beat a buy and hold strategy, how do you expect to win? And there's been many times I've been guilty of this. So it took a long time just to be able to just to simply hold. I've made all those decisions, those bad trading decisions from jumping out of the huge winning trades right before it goes off because there was some drawdown or I'm like, oh, you know what? Let me take the profit. It's been a tough week. And then absolutely rockets to where I analyzed or what I was seeing all week long. If you can just trust, it's going to play out. But there are times, as you see how I manage those other trades, those other signals where I'm like, all right, we got to exit. That comes with experience because, as we're holding right now, price may reverse. And then you're like, oh, well, I could have closed for that profit. Like we were just holding and holding, expecting something to happen when it didn't. And that's where trading can get paradoxical because the same point I just made, now we're making the opposite of that point. It's overall situational and based off the time frame you see the trade set up, as well as your confidence in what you see in the trade. And again, there's nothing wrong with taking profits though, but when you do see that type of trade setup, you need to try and trust to the best of your ability or look to really execute so that if you do close, you're like, all right, where can I get in again? If this does start working, where can I execute and, place a good stop loss and still take advantage of the move? Like if you really wanted, one could still buy for this trade. It's going up. You can still make money on it. Just because you didn't get an amazing entry or the best entry doesn't mean you can't make some money on this still. If and I may add some more positions. I don't think I will. I already have a good amount on here, but if I was looking at this right now, I was like, all right, oh, this is going up. Where can I get in? At the current price here, we could get on a retest if it comes down to 102,000. That would be nice. 102, 100,000 or 102,100 to 102,000. This little area right here would be nice. But if it doesn't and it just continues pushing, you could also literally just execute right at this price. Have the take profit 105 if you wanted 105,000 even. This is still 1.63 risk reward ratio if you bought right here with a stop loss of 101,400. If you wanted to be a little safer and put it below the daily low, you're still at a good risk to reward. It's still over 1 to 1. And then if price does go to 107, it's over 2 to 1 risk to reward ratio for those. So when you scale in, but yeah, first you can definitely take this still. It's not too late. Just have to, same thing, appropriate risk, set the stop loss. And yeah, your risk outweighs, or the reward outweighs the risk. This is a good trade setup. It's in line with the direction we're seeing. It's definitely safe. But for scaling in for those entries, for example, so we have the ones I got at 101,300, or I'm sorry, 100,300. So we got the ones down here. We got some up here as well. For those stop losses are placed at a they're placed higher immediately. So there is a chance that it comes back and just takes you out and you take the loss. That's the risk with scaling in. And it can be a double-edged sword. It can help you make more money on a winning trade, which is the whole purpose. But it also, depending where you get in, could lose that profit and put you in a loss or put you in a small win because you wanted to take on additional risk. And that's the downside to that. But it's situational, and you also have to use a set amount that you're looking to add. So for example, let's say, so for me, for example, I have a 0.09 that I have total, and then I got more on up here at the 101, 300, this area here. But we were in some drawdown because it pulled back. But I had this stop loss right where my entry point was for here. So if I got taken out and it just happened to go back to entry, then, it is what it is. I was willing to accept the risk on that. But you're going to want to place it either at the same entry point, entry price as your first entries. That way, when it comes back, you're not taking a massive loss because it doesn't keep going in drawdown, all the way back to where your original stop loss is for your first entries. You would want to move these to break even to where the stop loss is for your second entry. That would be the proper way to do it. And, that could still result in a loss depending where your first stop loss is. This trade might either, yeah, could put you in a loss, or this break even position might protect you from that loss, or if it's in a small profit, could just put you at a net zero, overall, not a win or a loss. But this is how you would ideally do it. You would, another way, which I find to be more effective, is starting with just one or two of the positions that you plan on putting on. So let's say you wanted to put on a 0.05 on this at this area. You saw price, make this bullish candle. Now, let me move this out the way. Let's do this. So you see price make this bullish candle. You're like, all right, yep, this is the low. I need to scale in here. So you buy it right here. Place the stop loss at your entry point with one position though, or stop loss at your first entry point. One position, a 0.01 or a 0.02, because you want to get a 0.05 on, but you're not certain this is the low. You're already in a good profit, and you don't want the drawdown to either create your current trade into a loss because you still want to make some money on it. So you put the 0.01 or 0.02, just a little bit or half of the amount you tend to put on at the stop loss. You let the trade keep playing out here. So next candle. Okay. So depending where you had this, you either barely survived or you would have got taken out on that smaller risk you scaled in on because you didn't put the whole risk on for this reason right here, just in case it were to lose. If you would put that full risk on and got stopped out, you'd be like, wow, I just messed up that good trade. I took a small loss on, or a loss on that, and just messed up my entry point. There's another way you could do it. Instead of trailing that stop loss, accepting the risk on the first trade, this one, leaving it open. And, if it took you out, then that's what you're accepting. But there could be more risk with that because if you lose this trade and then, so let's say price came crashing down, you just lost both, which does happen. But that's, you know, the risk you accept when you try to scale in with more positions to add to your winners. But more often than not, when you do it right, it plays out in your favor. The only downside is, trying to exit out of them when it doesn't go straight into the direction you're thinking. It comes back, comes into the second position again, where you could exit it at the high. That's when it can get a little hairy because then you're overexposed on a pullback and you're like, whoa, what's going on? I have a lot of risk here. I'm about to get some deep drawdown. But back to this. So you entered, let's say you didn't get stopped out, and you're like, oh, it just wicked like that. Yep. Okay. That to me looks like it's going to continue higher. The 1 hour, you can see a bullish candle forming here. You're going to enter the remaining 0.03 out of that 0.05 total you were looking to get on. So you got 0.02 here because you saw it react one way. Ended up coming down a little more. Now you see the for sure confirmation. You're seeing price react very strongly as you want to, as you're getting that confirmation for it to go up. So you enter the remaining 0.03. Now you have that full risk on that you were trying to do. And as you can see, price push in your favor. In that case, you would move these to break even. Not necessarily up on here. I mean, you could do it and wait that long until price had a strong push, but you could do it once it starts to break above here. Structurally, based on how the candlestick formed, once you saw this bullish candle push up like that, you could just, move the stop loss right there, move it all to break even and just let it ride. Because theoretically, if it's going to continue, it should not be coming back at all when it prints candles like this. I mean, there are instances, where maybe something like this happens and then it goes, but that's more so extreme. Usually it plays out like this. It keeps climbing and you'll adjust it based off these lower time frames. Make it real tight so that if something does happen, these are either in a profit or at break even. Your original position, in this case, which I am going to say to make our stop loss tighter now that we're up at this price point, because we do have to reduce some risk here. But, we're going to go break even here soon now that we're up at this point. And so, or even in a profit, but either way, we're protected. These are protected. Make sure that these are at minimum break even, but you probably want them in a profit. And this would probably be in a profit or a break even now as well. And that's how you could either protect yourself in case price doesn't go all the way to where you think, which would be unfortunate, because we're up good right now. You don't want to lose all those open profits from, just some sharp correction when you could have closed and then potentially re-entered. But at the same time, you want to be able to trust the trade. So that's why you manage it real tightly. And if you really wanted to, if you want to be really frugal and not let the trade entirely breathe, but maximize on your profits or be able to look for multiple trade entries, in terms of, okay, I'm going to exit. Let's see where we can enter again. You can do that, but that's more so scalping, which is, a bit faster. You have to think a lot quicker. And that'd be more so catching these moves and, exiting before it entirely corrects back down to your entry or, beyond that. But you can do the same thing that I'm talking about, but for scalping as well. But that's what makes it a little more dangerous and risky because you're doing that on a much faster pace. So instead of, see, all these candles are hours, you have hours to be able to scale in and reduce our risk. But when you're scalping, you have maybe a few minutes to decide that. Like, oh, am I gonna take the risk? Okay, yep. So let's jump down. Good example would be gold, right? So you see gold moves all over the place. If you are scalping this, right, and entering multiple positions, let's say you caught the short right here, 26.88, stop loss above the high, and you're targeting 26.70 before all this played out, right? So let's do this. Actually, let's just say for this example, we're targeting the support 26.65. So you see this strong push and you're like, oh, yep, I want to add some more because we have another $10 to go before take profit. I believe it's going to keep going. So you reduced your risk. You're at break even, letting that run free. You want to enter again. So let's see if we can. We're looking to enter, let's just say right at the low here. You're thinking price is going to keep pushing down. The stop loss above this high. You have a 1-to-1. Now this could be risky, but let's say you only put in, you're trying to get a zero point 0.5 on. And we'll say this is one lot, trying to get 1.5 lots on. You want to get zero point 0.5 right here or add it on. So we'll start with the 0.1. You'll add 0.1 out of that 0.5 you want to get on here at this low, just in case it pulls back up to here. You can get those additional positions to try and get you a better price and get you at the high of the candle. Oh, hang on. My apologies. Did not mean to do that. Okay, so we're there. Right, next candle here. Okay, so we saw it pull back and we entered the remaining risk. This is what I wanted to see. Candle rejection. Let's enter the remaining 0.4. So we have one lot and we got a 0.5 on. Now that it pushed kind of like this, we're going to reduce the risk above the candle. A stick wick. Managing your risk like this can be problem sometimes because if there's a lot of volatility, it just smacks right through and you're going to be like, oh, dang, why'd I make a tight stop loss? But at the same time, that's what's going to save you. It's going to save your ass, especially when you're doing this. Initially, you're going to be like, oh, why'd I do that? But then you're going to see it climb up and then you're going to be like, dang, I'm glad I had that because I'd be in major drawdown. That's the double-edged sword of being able to scale in. And that's why you have to manage it like this when you're scalping, especially on highly volatile pairs like gold and Bitcoin. Then you do that. Next candle, still pushing. As you can see, how to pull back, but you're good still. At this point, you could either go break even or if you really wanted to, because from that entry point, price already pushed 50 pips. You could have called it a scalp right there. But we're at break even, you're thinking price is going to keep going down. This doji candle here either looks like it's going to either smash down or take us out. So we'll see what happens. But either way, we got that locked in now. We're risk free. We have 1.5 lots on. At this point, we want to probably put this in a profit. So we'll probably move the stop loss for this entry point up here at our stop loss for our second entry now. Now, this is managing it a bit aggressively, but we're in a profit. We have exposed extra risk on there, extra exposure on there. We want to be able to lock in as much as we can. And we want to obviously hold it to take profit, but things happen in between. And ultimately, we're trying to put money in our pocket. And that's what matters at the end of the day. The next can. Okay, still going, still going, still going, still going, still going. Take profit hit. So we didn't get taken out. We didn't get some crazy move. But let's say you're like, you know what? On this higher time frame, I see it going down to 2650. This is definitely going to break this. There's no way the support's going to hold. So you hold through this, right? You're trying to be patient, like we are in Bitcoin. We're trying to be patient here, trying to let it play out to the overall target. So right now, everything is risk-free. You have the stop loss and profit for the first entry. You have this at break even. Next candle. Okay, looking good. Looking like it's going to break. Okay, so we have that. We're good. So we're just going to let the trade play out still because, we already have everything accepted. All right, ends up continuing down. But in this instance here, this is what you want to be aware of. Because sometimes this will happen. I'm going to say you're scaled in, as you're, trying to take on more risk. A move like this could mess you up or could really dwindle the profits you have because, this was a $7 movement. That's 70 pips. That's a lot of money that you just gave up to try and catch up or catch this overall move. 70 pips on 1.5 lots, that's let's see, 500 pips. That's gonna be 100. Half that is 750. It's gonna be over $1,000 that you just gave up for letting this come back. And that's where you have to think quickly and go, oh, it's rejecting from here. Oh, it's breaking this lower time frame structure. Let's close. And that's what makes it difficult. Because then if it plays out like it did, you're like, oh, why didn't I hold? But it's not certain. You don't know that this will happen, so you have to adjust. Oh, I meant to upgrade that yesterday. All right, we're gonna buy Zoom Pro today. I had it a few months ago, but I wasn't doing the Zoom calls anymore. But we are again. But overall, that's it though. That's our scaling in and scaling out will take some practice, but you learn how to scale out by reading these lower time frames, how the candle reacts. It's supposed to react a certain way when it's going to go, and it will react a certain way when it doesn't. And you want to try and be ahead of that as best as you can. But overall, I hope you learned a lot from that. That's the name of the game. And you don't have to trade like that either. You can just do one entry and just set and forget. That's what some people do. But if you can take advantage of your trades, that's where you're going to make a lot more money. And that's what the professionals do as well. They're doing exactly what I just explained, but very quickly, very, very quickly. Some even do it on the 1 minute, 3 minute, and they're making rapid decisions with high risk. But all right, that's all I got for you. Hope you enjoy. This will be uploaded in just a few hours, and I'll be getting that how to get your securities licenses video finished here soon. It's almost done. It's a lot of work. It's quite a lot of information, but very helpful. But hope you have a great weekend. Thanks for stopping by and looking forward to this trading week. Be safe. See you again soon. Peace.